you just have to scratch your head and say, should I be investing in the company that is exactly where I want to see traction? Or should I be scared all of a sudden that all that great work they built over 5 years was just commoditized by a new AI coding platform? So, as an entrepreneur, I think you need to think about that. And the way you combat that is, as a 5-year-old business, we've learned what we should be doing, and now we're developing our product cycle much more quickly. In fact, I've walked on a couple of deals because entrepreneurs were too hung up on what they've achieved and not where they're going to go with
Yeah.
AI enablement. Hi, I'm Dave Wechsler from OMERS Ventures, and this is the future of insurance.
Dave, I always am. I open this with like, oh, it's great to sit down with you, but I do have to call out, as I told you before we started recording, I grabbed a shirt this morning, not really thinking through anything. It was my Insurtech wrap shirt without remembering that we were sitting down to record this today. So I once I realized, I was like, well, I got to keep this on for the show because how appropriate is that? But yeah, Kismet, fate, I don't know, something, but it's a little bit weird, I will
You
say,
know, I've
but
been
in a good way.
smiling favorably on me, and I appreciate your
Yeah.
support. Yeah, definitely.
Well, so for people who don't know what InsurTech Wrap is, or more importantly, who you are, give us the quick rundown on you, your work, and obviously tell us about InsurTech Wrap as well, and then we'll start to dig into stuff.
Yeah, I'd love to. Thank you for having me on and having a chance to talk about myself, something everybody loves to do. So, I had a career that started in the startup world. I did 5 different startups over about 25 years, 3 of which I founded, 2 I joined. It was an amazing time in my life, filled with a lot of ups and a lot of downs. It's the absolute hardest way to make a living, and if you
Uh,
do it, you're crazy. But I love all entrepreneurs, and I love that craziness, and I'm always here to support it. That turned into a career move to my first job ever at Comcast, where I ran smart home growth strategy, and part of that smart home growth strategy thesis was kind of developing a B2B approach to selling a smart home. And I found the insurance industry in that process. The
sure.
thinking was, yeah, use smart home technology to avoid loss. That was back in 2017. And during that time, I reached out to a bunch of insurance companies. There were the traditional like discounts for home security, that kind of stuff, but no one was really talking about how IoT could change insurance until I met Hippo Insurance, and at the time Mountain View,
Yeah,
small team of entrepreneurs who are yet to actually enter the market. I built a partnership with Asaf and his team, and a big part of that was Comcast bringing technology and marketing, and as they launched product over 2017, 2018, we actually deployed to Comcast customers, selling a lot of Hippo's initial policies with kind of an integrated tech insurance product, which
uh,
had a slew of regulatory issues. I had to go get my insurance license. We had to set up a national carrier at
wow.
Comcast. It was pretty cool. Great learning for me, but really complicated.
Yeah,
And that partnership was a lot of fun. It was challenged in the sense that big company, little company, market dynamics, COVID, which changed Comcast's business pretty dramatically,
yeah,
um, brought internet and movies back into the the front line of their growth strategy. But I was very fortunate to have that experience, and actually that led me to become the VP of growth at Hippo in I think it was 2020, about 8 months ahead of the IPO. Did that for a little over a year, and then I was called by OMERS Ventures. OMERS is one of the pension funds of Ontario. They were looking for somebody who had insurtech experience to run their insurtech portfolio. And as a career entrepreneur, the chance to join a VC was really exciting. Their
yeah,
venture arm invests across North America. So I came on board in the Fintech team and have been there for about 3 years. And one of the great things OMERS does is encourages everybody to build their own brand and to kind of develop their business the way they want to. And for me, as a career entrepreneur, the thing I saw consistently was the challenges of breaking into a new market. I
yeah,
did startups in a lot of different markets. And when I thought about what would be kind of a fun way to help build community in insurance, an industry that's, kind of tight knit and not always the most welcoming of outsiders, I said, let's do something fun, a little bit kind of irreverent. Let's do maybe a weekly kind of live Zoom. It was kind of COVID days or post COVID, so I was still thinking about
yeah,
what Zoom could do. So we kicked it off. We did a couple test shows, which was a live kind of Zoom audience. Let's just talk about all things insurtech. I'd have guests on, panelists on, and it had a live Zoom audience. Um, it was The first few shows were terrible. They were like just dreadful. They're
Okay.
all archived though. You can see them at
Yeah.
insurtechrap.com. But now we've gotten in the groove. Every week, pretty much, we're doing a show almost every Thursday. It's live, 2 p.m. to 2:30 on Thursdays. Anyone's welcome to
Eastern.
join. Yeah, Eastern.
Yeah.
And anyone's welcome to join. And topics are really diverse. Everything. Well, you've been on the show as a
Yeah.
speaker, but we've had everything from VCs to entrepreneurs to carriers, just talking about insurance trends. And it's
Yeah.
a open format where people can ask questions, engage. My number one goal is that when we all go to conferences, we shake hands, we have drinks together, we talk together because we met each other in an online forum like InsurTech Rap. So that's really
Yeah.
the purpose.
I got this shirt at ITC, not what was it, 2023, because
Yep.
you had like a hospitality suite where you hosted people and you couldn't move. There were
Yeah.
so many
Yeah.
people who came. So like that image you just painted actually is the real thing. And then take you out of the equation. Do you know how many events I've been at where I'm seeing people who I've seen on the Brady Bunch layout of Zoom just
Yeah.
from InsurTech Wrap? It's been really cool. Like you have
That's nice.
created,
I appreciate
yeah,
that. Yeah.
it's
That's really the goal. Well, it's not completely altruistic. As a venture capitalist, you want deals, and part of
sure.
getting deals is meeting people. But quite frankly, I think the rising tide lifts all boats. I found that in all my
Yeah,
startups. And, sometimes you're the benefactor, sometimes not. But when the industry does better, everybody does better. So to
totally.
me, this is a chance for people to get to know one another.
Yeah. I do think if you do the right thing, ultimately it works out in your
Yeah.
favor. If you
Yeah.
like go in with what's in it for me and how do I manipulate this to my advantage, it might work out for a couple minutes and then long term.
Yeah. Well, look, hey,
Um,
Karma got you wearing my t-shirt
see?
today. So
Yeah.
I must be doing something right.
Yeah. No, and it was not on the top of the pile if that's like, oh, it's just a no, I actually have to dig for it. So it was like, yeah, I'll wear my InsurTech Wrap shirt.
Well, you know
And
what I appreciate? Most people tell me it's their favorite gym shirt. I'm like, I don't want it to be your gym shirt.
no, no, I don't need anything to smell. All right, suddenly this podcast is going in the wrong direction. So let's get back on track. But um, it's I didn't know about the hippo part of your story, which I
Yeah.
feel ignorant because I mean, that was actually, I definitely didn't know about the Comcast side, but then transitioning into being at Hippo at such an interesting time. So that's a whole conversation we could talk about.
Sure.
But I am really curious, like, given that you've lived on both sides of that equation, um, selfishly or egotistically, more accurately, I talk a lot about how I was on the carrier side being sold to, and then I was the guy selling from the insurtech side, and that like solving the problems and having the problems gave me, I think, a pretty unique or somewhat unique perspective that has served me incredibly well in the work that I do. I
Yeah.
can only imagine the same for you, and I'm just really curious. Like, is that? I don't think I've run into a lot of VCs who actually have lived it, and that has to be really valuable in your work.
Yeah, it is. I think I have, again, it's a unique perspective. It's not necessarily the right one, and it's probably biased in a lot of ways the wrong way. But as a big company looking to be scrappy, we created a scrappy approach. And I was given a
Yeah,
really long leash as an entrepreneur. I was given a team, I was given budget, given fair amount of autonomy, which doesn't happen a lot at a big
yeah,
company. Um, but we experimented and we made a lot of mistakes. And that kind of attitude isn't normally accepted at a big company. You can't just try things, fail miserably, and then try something different.
yeah,
But we were small enough and under the radar enough. I had a lot of assumptions about what should work in insurance, and a lot of them were wrong. But if I hadn't met a great partner like Hippo in those early days, had I gone, say, to a traditional large carrier, I probably wouldn't be able to experiment even.
yeah,
And I think like what we learned the hard way was that some areas of what we thought would work did work, and then others were way more complicated than we understood. Everything from privacy of data to consumer adoption to even awareness and understanding. For instance, Hippo in the early days gave out a smart home kit to every customer. That was part of the underwriting.
yeah,
And I helped them build that while I was at Comcast, and I actually worked on that heavily when I was part of Hippo. And what we learned was a lot of people didn't understand that in the buying flow exactly what they were getting. So we had to move from kind of an opt-out model to an opt-in model because a lot of consumers weren't necessarily ready for that.
Hmm.
So there are things to me that are so like, why would you not do this? But other people may say, why the heck are you sending me this stuff? Like, what is it? I
Yeah.
don't get it. Or saying to Comcast, here's an amazing opportunity to add value for our customers, and compliance and regulatory people saying it's far too risky based on the way that we're regulated to do these kinds of projects, despite the fact that it may have incredible benefit for consumers.
Yeah.
So a lot of that stuff, you learn the hard way. It's like making the sausage, and then you kind of figure out, well, you have to kind of swim in certain channels, but you get your wins where you can, and you
Yeah.
kind of learn from the mistakes along the way too.
This is not relevant at all, but I'm just personally really curious. When you said regulatory, do you mean I'm thinking insurance regulatory, but then also recognizing maybe not your aspect of Comcast, but much of Comcast business, at least the communication side, is also regulated. So is that a
Yeah.
Comcast regs or
Yeah.
insurance regs? Both.
It's not only that, it's being one of the largest companies who,
Or
it,
SEC regs too, I guess.
yeah, I
Yeah.
mean, everything. And by the way, like Comcast is not the most loved company, but it's actually an incredible place that really does care about the customer, but it's easy to look at examples that don't feel that way. So when you've got things like mixing a lot of highly regulated products together
Yeah.
with potentially private information, you get into this kind of hodgepodge of like, is the juice worth the squeeze
Yeah.
relative to what we may get here? It totally understandable, by the way, too. But as a, break it kind of guy, it was hard for me to always both appreciate or understand why what we were doing was so bad. I'll tell you, one very large carry reinsurer came to me, flew a bunch of execs over, and I was just like, hey, wow, this is like incredible. They want to meet me. They're flying to Philadelphia. We
Yeah.
had a meeting, and they were like, if you could give us completely anonymous some basic data points that we could overlay against residential loss, we think we can redefine underwriting models. And I was like, this is incredible. We got to do this.
Yeah.
And our legal said, there is no
No
way.
way.
No
Yeah.
way. And I'm like, but this could change the way underwriting works. We have 30 million homes of data, and it's not anything that's that serious. And they were just like, Dave, it's just we can't take that kind of regulated risk with our
Yeah.
customers' information. And I'm like, yeah, I guess it makes sense. So that was the end of the conversation.
I've said this many, many times. That's a very we can't because rather than how might we kind of
It's
interpretation
understandable though. Yeah, it's
is
understandable.
understandable, but it also we tend to have that response to a lot of things and therefore
Yeah,
we don't seize on opportunities that leave us complaining about my rates are sky high, I can't get
yeah.
coverage or and well
Well,
we can't have it all the same way.
yeah, and this is the advantage of being, say, like an MGA, like a
Yeah,
challenger brand. Like if you're nimble and you have a small book, you can screw up. Okay, now you're gonna probably still piss off some regulators, but if you have, a failure or something that's perceived as incorrect with a small book, the impact is very different than if you have 10 million people as your customers. And
for
again,
sure.
that's where I think MGAs and challenger brands need to take risks because that's the opportunity, right? I can break things because I'm not going to have the same regulatory hurdles or ruin things the way that a larger company might. So,
When you were talking about the constraints there around like private data, consumer data, personal data, um, you're talking about smart home specifically, but we could have just as easily parachuted that into the mobility discussion and what's going on with smart cars and the data there and the sharing with like that's not for anyone who's like, oh, I don't do homeowners, so I'm not interested in that, or IoT is
yeah,
not relevant for me. It's hitting in so many different spots. I was just in Australia and someone was pushing on this as well. Like, well, we can't share the data because that violates privacy law. It's like,
yeah.
yeah,
Well,
maybe
just think about
right
this.
now, but yeah,
Yeah. For homeowners, just to kind of like expand it a little bit,
yeah,
presence detection, super valuable. Are you home or not when a loss happens?
yeah,
Do you watch HGTV? Is there like literally a bias towards people who do and how they care for their homes and not? So when you think about mobility, it
yeah,
could be car care. Like, do you do your oil check on time? I mean, these
right,
could be very basic extrapolations, which in the world of AI becomes incredibly powerful to prove correlation, causation, whatever it
yeah,
might be, and actually prove causation, I guess, and
yeah,
in fact get better understanding of where the value of the data is. And this is
yeah.
something we've talked about in the industry for a long, long time, but I feel like we're finally getting there where random data sets might actually have value in underwriting and
Yeah.
loss avoidance, remediation, whatever it might be.
We're talking about predict and prevent so much, but we're not really doing that much. But
Yeah.
the difference today is the mechanisms are starting to fall into place.
Yeah.
Like it was a bit of a pipe dream or too much of a reach, and like you couldn't really get ahead of the curve. But once you factor in what you can predict about people's propensities and proclivities with AI, suddenly you can get a far better understanding of something before it hits, where you could
Yeah.
actually do something about it.
Yeah, and I think that's another really exciting part of the insurance model right now. Like underwriting models have traditionally relied on large pools of risk and kind of like big swaths of like, oh, this person or this home or this car falls into this risk bucket
Yeah,
despite the individual behavior. And I've had this argument with a lot of, kind of people have been in the industry for a long time about the way underwriting works and the way risk pools work. But and maybe this is not the best thing for the insurance industry. I don't really understand the macro part of it, but I do think underwriting can become very bespoke with very unique data sets. And let's say, for instance, life, right? There are all kinds of determinants about like family history, medical history, blah, blah, blah with life. Yet there's real-time diagnostics data off
yeah,
of devices
yeah.
or new medical records that could change those underwriting models. So should they be changed or not? I personally think they should be. I don't know what the net impact is overall, but I do think we should be exploring those areas.
I had someone push back on this idea that as soon as you do that and you get down to an N of one population, you're no longer that insurance doesn't work anymore because there's no risk pooling. And I think they're missing the point because risk pooling is not just about kind of averaging out the rate across all of them, which the only thing risk pooling is that doing there is making up for imperfect data and capabilities to use it. But you still have loss smoothing because not everyone will have a loss at the exact same time in the exact same way. So you're priced more correctly on each risk, but you still have the loss benefits of a larger pool.
Yeah,
It's not just averaging out.
100%. And by the way, I think pooling's getting mixed up anyways. Like, look at commercial auto. All the commercial auto guys were so smart. The first thing they did was put a camera in the cab.
Yeah.
Immediately, 50% of your drivers don't want to be
Yeah.
under a camera in the cab. Why? Because they're doing things in the cab they shouldn't be doing.
Yeah.
So you immediately have selection bias. And I think that's going to screw risk pooling up anyways. So you
Yeah.
might as well, I think, run towards the advantage of do N of one of low risk and go from there, you know?
Yeah. Yeah. Um, we haven't even really talked about your work at OMERS, other than that you do the podcast while you're there. So tell us a little bit more about like what is your focus, and is that just you or is that OMERS as a whole? Like where are you stage wise? What kinds of companies? Is it solution providers, MGAs, like
Yep.
the whole nine, understanding better kind of what your purview is.
Yeah, so OMERS is the pension fund of Ontario, or one of the pension funds of Ontario. We manage a massive amount of capital, one of the larger money managers in the world. They allocate a small portion of about 1.6 billion, which for VC is not huge, but it's not small either.
Yeah.
Um, but it's a traditional venture fund oriented towards financial returns. We typically invest in Series A to Series C companies.
Okay. So
And
not super early stage stuff.
yeah, yeah.
Yeah.
And despite being based in Toronto, most of the venture capitalists are actually in San Francisco. So we're looking at deals across North America. One of the areas that we look at is the broad fintech category. I'm on that team. And in fintech, we're looking at banking solutions. I mean, really anything in financial
Yeah.
services, but also insurtech. And I've got a pretty broad mandate in insurtech. We've done predominantly MGAs, and we're a little heavy on the MGA side right now. So we're going to probably do a little less of that. And I'm going to start looking a little bit more at tools and technology, which is obviously a hotspot in
Yeah.
insurtech right now, AI underwriting, claims, et cetera. And I should say our typical checks are 6 to 8 million US. So we like to get in an A or B stage, which would be a couple million in revenue, probably maybe a million, million and a half of revenue up.
Yeah.
So we feel like the industry likes the product, but now it's early growth kind of continuing to prove out, is this thing working or not?
Yeah. Do you guys lead or you tend to
We do. We
follow?
like to
Yeah.
lead. Yeah, I'm candidly in today's markets in fintech, sometimes the deals get a little big and it's bigger than we can write a check. So we'll participate in a syndicate,
Yeah.
but we do lead as well.
Yeah. I I'm not a VC, so what do I know? But I always found it weird. I've seen a lot of deals and it's always been the hardest to find the lead. You can find typically can get investors who will put in and some of them sizably, but very few who want to lead. And a VC explained it's like it's the risk side of it because then it's all your fault. It's your
Yeah.
terms and it was your fault. And I'm like, yeah, but that's an insurance view on it. That's the risk averse view. I would want to control the terms. And if I'm placing a bet, I'd want to be the one steering. Not that I've any faith in myself for building VC terms and investment terms, but if that's my role, I would rather really understand the terms and do it on my call, which is I think the same thing in insurance. You'd hate to be a following market or an excess market on top of a primary who did a bad job that you wouldn't have done.
Yeah, I couldn't agree more. And it's really more than I think the perception of risk. Like there was an era where, and this was a recent era, where anybody with venture money just threw money at deals and you'd be
Yeah.
like, "Oh, I invested in a asteroid mining company." Like, what the heck do you know about asteroids? Nothing, but it sounds like really cool or crypto or whatever.
Yeah.
And what with the the destruction of value in the VC market over the last couple of years, what you start to learn is that you should at least understand the space that you're investing in.
Yeah.
So then you have a cadre of people who are like, oh, I really would like to start to add, say, InsurTech to my investment thesis because I want to diversify, but I don't know a lot about InsurTech. So
Yeah.
I'm reluctant to actually choose a player in the space without actually understanding the fundamentals.
Yeah.
So then that lead typically should have at least an awareness that they can diligence a deal in a way that people who are participating say, that Dave guy knows enough that I trust him and any check the things that I were worried about he checked out with and he can validate that this isn't a crazy idea. Now, remember, venture capital, you're going to lose all your money 6 or 7 times out of 10, but at least it should be an informed mistake. It shouldn't be like something that just comes out of left field.
Yeah.
Um, although, there's plenty of examples of, monkeys choosing stocks in the Wall Street Journal better than stock pickers, but who knows?
Yeah. I do I have had that conversation with founders around who do you want investing in you? And for some, they've been drawn to like the startup I was at. We had a wonderful VC who had a really good track record in some major brand names that anyone off the street would know.
Yep.
Um, and I think that was really enticing to the founders. Like, wow, look at their the labels behind them. Just like we were trying to get logos on our sales decks, like they had these amazing logos that they had invested in. But the problem was, as well intentioned and smart as they were, they had zero understanding of selling to insurance companies, and so that taught me a firsthand lesson. Like your lead, at least, or some major voice in that group of investors and certainly the one who's sitting in your boardroom needs to understand the space. And sometimes it's good to have an outside perspective, but that's all we had other than the founders. And that, like, we were getting all these really interesting ideas that in a B2C space, different industry would have been awesome. And insurance would have gotten us locked out of the market. And that's
Yeah.
like, oh, and it's hard, I think, for some of the founders to push back. Like, well, our investors are pushing us to do this. It's like this is a terrible idea, and you don't
Yeah.
know how to talk to them about that without offending them.
Yeah, I listen. I have a lot of beliefs in this. Over my 5 startups, I was part of teams that raised over close to $30 million, both
Oh,
strategics, VCs, angels. First of all, your investors, whether you like it or not, become your most kind of accessed resource. You will see your investors probably more than you see your romantic partner,
yeah,
and it sucks. But as I say a lot, like you should feel comfortable calling me on a Saturday night, and then I'll cancel my plans if there's a crisis. And you should actually want to talk to me. And if you
yeah,
don't, like if we don't connect, then don't work with me. Like I'm not in this game to have. It's a 7 year relationship likely.
yeah,
So like you got to feel good about that. Two, they should be able to give you good advice. Now, I'm not going to tell you every great VC necessarily is deep on subject matter, nor do they need to be, but they should be able to at least get you other people who can, or be able to talk through problems in just a business
yeah,
perspective. That's why I really personally like when entrepreneurs prefer operator-oriented VCs, people who have done it before. Not to say that financial-oriented VCs don't provide a lot of value. They do, and they provide value in ways that sometimes I'm not able to, like understanding how to optimizing raises and exits and all that. But when it comes to day-to-day problems, we all have the same problems,
Yeah.
whether it's hiring, firing, product production, whatever it might be, to more nuanced things like, oh my God, a regulator called me on this insurance issue. What do I do? And
Yeah.
that's the other piece too. I've been around the block enough now that like all these crises that happen, many times I would stay up sleepless nights, and now it's always like we'll figure it out. Like it's
Yeah.
it's it's not the end of the world. End of the world happens once in a while, but honestly, like a lot of this stuff that seems overwhelming to the entrepreneur, hopefully they can go to their investors or their advisors, whoever it might be, and say like, this feels like a really bad situation to me. And hopefully one of the big value adds is that person will help them, correct the ship and stay out of serious trouble.
I'm going to give you some phrasing that I don't know how or why the lightning struck. Maybe it's the same lightning that got me to wear this shirt today, but this occurred to me, I don't know, a bunch of years ago. I don't I don't think someone else came up with this because I have never found it elsewhere and I know people who have searched for it, but I call them fast forward problems.
Hmm.
So like there's real problems out there, like someone dies or like something real happened, right? Um, but most problems that we face, no matter how bad they seem, the real issue is we just wish we were on the other side of it.
Yeah.
And we likely know how to get through it or know people who can help us get through it, or we will get through it. We will recover from it, even some really tough things. So most problems out there are fast forward problems. And it's helpful to just sort of remind yourself, like, this sucks. I'm really on edge. I'm not sleeping. I'm not eating. But I also know like I've been in this spot before and I wouldn't still be here if I couldn't get through it. So
Yeah.
I wish I could hit the fast forward button and be done.
I think like, and you and I have talked about this, just the learnings about being an entrepreneur and moving maybe into like a VC type role or any kind of advisory role. Like some of these things that feel so existential to the first time entrepreneur or the young entrepreneur is like it's not that big of a deal. Like it'll
Yeah.
be okay. And you're making it a bigger problem than it really is because in your mind it's such, and I understand it's consuming. And by
Yeah.
the way, it's an amazing opportunity to learn regardless. But to your point, you will be on the other side of this.
Yeah.
And in fact, if you kind of took a moment and thought about how you got here, what your options are, like what's a pragmatic way to get through it, I actually think you can learn a lot and actually enjoy it. And I even hate to say it, there have been moments in my life where I'm still such a adrenaline junkie doing all those startups that I'm like, things are too calm. Like a little
Yeah.
bit of a little mix up right now wouldn't be that bad. And my wife says to me, stop saying that.
You're like an episode of The Real Housewives, Dave. Um, so I wouldn't do justice to the title of the show if I didn't ask you about looking forward.
Yeah.
You mentioned moving into some things other than MGAs or moving more into that. Are there themes, are there things that you think other than AI and Gen AI being all anyone's talking about, like where do you think things are heading in the next few years and we should be, or maybe they should be heading, but we need to sort of catalyze that more?
Yeah, listen, I got to talk about AI because you can't avoid it, but I'll
I've
talk
not
about
heard of it.
my kind of thread here.
Yeah.
First, what I deal with as a VC every day. So just AI, it's cool, it's exciting, blah, blah, blah. But when you look at incumbents, not incumbents, when you look at startups who've been in the market, say 5, 6 years, and they're finally getting product market fit, they're finally getting sales, they're getting traction, and then two young entrepreneurs come in with an AI built tool that's 10 times more feature rich than the one that I've been diligencing for the last 6 months to invest in. Now they may not have customers, but they have a product that they
Yeah.
built for 1/10 the cost with two people versus 50 people. You just have to scratch your head and say, should I be investing in the company that is exactly where I want to see traction? Or should I be scared all of a sudden that all that great work they built over 5 years was just commoditized by a new AI coding platform?
Yeah.
So as an entrepreneur, I think you need to think about that. And the way you combat that is, hey, as a 5-year-old business, we've learned what we should be doing, and now we're doing the same thing. We're developing our product cycle much more quickly with our customers and all that. And I don't always hear that. In fact, I've walked on a couple of deals recently because entrepreneurs were too hung up on what they've achieved and not where they're going to go with
Yeah.
AI enablement.
Yeah.
Next, underwriting claims, et cetera. I think they're all different now. I really do. And if you're not coming to me again with a strategy around how AI changes this, I'm worried. I'm worried for you
Yeah.
because it's just like it's too powerful and it's too valuable to ignore it. Um, and then other areas that I think are intriguing. I'm kind of it sounds so cliche, but I've become a crypto blockchain fanatic, and I think a big part of that is. And by the way, for years I was like, besides trading crypto, I was like, this is such a joke. There's no problem here that can be solved by this. I'm completely on the other side now. I drank
Okay.
my own Kool-Aid. I really think tokenization of real world assets, including insurance, getting new capacity, making it accessible, like, everything from, reinsurance to even underwriting. Like, there are ways to do this on blockchain and through crypto that I think are really revolutionary. A little too early for our investment appetite, but
Yeah.
something I'm keeping a really close eye on. And then new products in the space as well. I'm seeing more and more like smart contracts being a way to enable insurance products in both new industries, but also traditional lines of business as well in insurance. So these two things are keeping me really busy.
Yeah.
But oh, one more thought here too, and I can ramble about this forever. But I was so focused on like, oh, replatforming all these old core legacy systems, the policy admin systems,
Yeah.
which are getting because there's data silos here and there, and the insurance company has to start talking to all the different groups for better underwriting, for better claims. Replatforming is going to happen. Now I'm hearing this use case a lot from entrepreneurs who are telling me, nope, we dump an AI agent in
Yeah.
there, and all that messy crap everywhere just gets sucked in the AI agent,
Yeah.
cleaned up, and outputted. And that's not great. That's kind of like, does that mean we're leaving the green screens in the insurance company forever? And a lot are saying, yeah, because the insurance company doesn't want to do all that work and they're scared to, and they've got a big piff and they're worried about moving it. And I'm kind of like, I don't know if that's good or bad for the world, but it's happening nonetheless. So I think these are all trends that we have to be cognizant of.
So I had that conversation specifically with a tech salesperson
Yep.
earlier this week. It was like a hypothetical kind of training him on selling into the insurance industry, and he's like, "What issue needs to be solved?" So I was talking about this like all this data that's trapped and the cost of migrating to the cloud and unifying it, if you can even do that, which is questionable that you can do it successfully. At least for a lot of carriers, they wonder, is massive. My point was, I don't think you need to worry about that because AI can solve for it. And what you painted, that picture, I think that's very real and that's a solution. But I still wonder, like, why can't the AI solve for the move? Like, it still
Yeah.
gets moved, but like, let the AI figure it. Like, it can all suck it all up and not just give it to you piecemeal when you need it, but actually inject it into the new unified cloud-based place correctly. If you trusted it to answer you on the fly, why can't you trust it to migrate and kind of
Yeah.
refactor?
I think that, and we don't need to go in like the technical depth here, but like I think that there's kind of like in my mind two kind of plays right now in the space. One is I'll stick a piece of AI in the middle of all your old stuff,
Yeah,
and that piece in the middle will become the new kind of like output and the
yeah,
analytics. And that's kind of like the band-aid for like you got a lot of old stuff and that's okay. The second is to your point, which is like let's use AI to convert everything to the new world. And we're literally seeing software that looks at your old legacy code, converts
yeah,
it to robust new code.
yeah,
It doesn't really work all the way, and most enterprises would be scared of it. But we're in a new world. I mean, like we're in inning number one or two right now.
right.
So in 2026, there's no doubt you'll be able to walk into an enterprise and say that old COBOL system you have, no
Yeah,
problem. We'll convert it for you in 2 months. Here's the price tag, and we're using all AI to do it
yeah.
versus outsourcing it to another country or something like that.
Just talked to a major life carrier who is moving all their COBOL using AI
Yeah,
recoding and their IT team to fix
yeah.
the stuff that didn't, or a contract or whatever. But yeah, I think for people to say like, oh, it's 10 years out, like not at the speed this is moving.
No, no.
I think you're
This
spot on
Yeah,
2026,
this
which
is
means you
great
have
for
to
the
plan for it
insurance
now.
industry. Yeah. It is. It's I'm seeing it. We've seen
Yeah.
examples, actually in banking, we've seen a couple that are like, oh my gosh, wow, they already did it.
Yeah.
Um, This is great for the insurance industry. It's hard for the insurance entrepreneur though. That's the problem. And the VC, not to cry your river here, but as a VC, it's kind of like where do you invest when all this stuff's
Yeah.
changing so
Yeah.
fast? So
Well, and I think you're in this moment of it's like someone who was investing just as the internet was happening. It's like, wait, should we be pausing?
yeah,
Because there's like it's another one of those momentous shifts. I think the speed of the shift is a lot faster now, but the problem is it's not a one shift. Like
yeah.
the internet, like once it was there, yes, it's evolved, but it's there. AI, I feel like you're saying, like there were solutions a few years ago using AI that were pretty cool at the time, but not acceptable now. And like
Yep.
a year from now, what we thought was cool now will be kind of unacceptable.
You nailed it. It's interesting because VC people love, especially insurance, to make fun of the dumb bets that VCs make. That's part of the job. We're supposed to make dumb
Yeah.
bets, and we're supposed to learn from them. And to the internet point, a lot of the things that VCs invested in the early days of the internet tanked, and then came back with a vengeance and made a lot of money. But in this world, it's kind of scary
Yeah.
because you may not even get good learnings out of it. It may just be completely gone in a year because AI changed everything again. So
Yeah.
it's exciting. It's an exciting time, but it's a challenging one to feel comfortable in as an investor.
Yeah. And even podcasts aren't safe, Dave.
That's another
So
conversation, my
we'll
friend.
have to retire. This is a lot of fun. I've been asking you to do this for at least a year. I'm really glad that we got to do it. And
Yeah, definitely.
a year from now, I'll put this shirt back on and randomly we'll be talking that day as well. Thank you so much for sitting down with me, Dave.
Thank you, bud. I appreciate your time and the opportunity.